Let me tell you about a very expensive surplus recovery mistake made by a specialist. Actually, let me tell you about two specialists and how 15 minutes of contract drafting made a $1,425 difference. Both got a call from property owners who'd lost their homes to tax sales. Both had roughly $47,000 in surplus funds waiting to be claimed. Both signed contracts yielding a 40% contingency fee, standard industry practice. Both went to work immediately. Before I continue, make sure you like and subscribe for more videos like this. Every surplus recovery specialist knows there are filing fees, title searches, expert consultations, courier services, travel to the courthouse, and a whole host of other expenses that go into collecting a claim. These two had each accumulated just a little over 2 weeks of work, totaling about $1,425 in out-of-pocket expenses. Documented, receipted, legitimate business costs. Then both got that call from their client saying they were redeeming their property. You see, when a property owner redeems, meaning they pay off the tax debt and reclaims their home, the surplus disappears. No surplus means no contingency fee. All that work, all those expenses, potentially for nothing. One specialist's contract was simple, clean. Standard contingency language. Specialist receives 40% of recovered funds. That's it. When their client redeemed, he asked about the expenses. The client pointed right back to his own contract, stating, and I quote, "You only get paid if you recover the surplus," unquote. The client was right. This specialist had no legal ground to stand on. He lost every penny of those expenses and 2 weeks of his life. The other specialist? Her contract had 3 additional paragraphs. Just 3. Paragraph 1. Client agrees to provide 72 hours written notice of intent to redeem property. Paragraph 2. In the event of redemption, client agrees to reimburse specialist for documented out-of-pocket expenses incurred prior to notice. Paragraph 3. Reimbursable expenses include filing fees, title searches, expert consultations, and other costs directly related to surplus recovery. When her client called to say she was redeeming, you know what happened? The client said, "I remember that clause. How much do I owe you?" She sent an itemized invoice. The client reviewed it, acknowledged the work was legitimate, and mailed a check for $1,425 within a week. The client even thanked her for being professional. Same scenario, same work, same expenses, 2 completely different outcomes. Here's the lesson learned. Contract language isn't just legal jargon. It's your business insurance. Those 3 paragraphs didn't just protect her money. They maintained the professional relationship. They demonstrated respect for both parties. They acknowledged that real work deserves real compensation, even when circumstances change. Remember, an ounce of prevention is worth a pound of cure. Thanks for watching.